Zimbabwe now. The country is likely to produce about 205 million kilograms of tobacco this year. That's slightly more than 2016's harvest, and sales of the main export are likely to improve dollar supplies in the cash-strapped economy. Tobacco now actually brings in a lot more foreign currency earnings than gold and platinum combined. Zimbabwe is, of course, desperately short of dollars, as we've reported previously on the program, due to its moribund economy. Although traditionally, liquidity does tend to improve during the tobacco selling season in the first quarter as cash comes into the country. Tobacco buyers had borrowed about $700 million offshore to purchase a crop from farmers this time round. A lot of the leaf, once bought, is processed and then exported over to China, the largest investor in the southern African country. Let's get the latest details on this year's auction. Farai Makutuya joins us now live from Harare. Farai, good to see you. With an estimated 205 million kilos of tobacco leaf for the auction, how much is that likely to raise in dollar terms? Give us a figure here.
Rama, last year's output was this year's output is largely expected to be the same as last year's. The prices that the tobacco will fetch are also expected to be pretty much the same. The average price last year was about $2.95 per kilogram. So given this marginal increment in production, that 700 million that the merchants and buyers have talked about is about right. Last year's crop brought in just over $600 million US. So if you're playing in that 700 million ballpark, that is about right. But also, you mentioned there that this will ease the cash crunch in this country. It will increase the supply of liquidity twofold: the physical US dollars that are being sourced offshore by the buyers and that will come into the market, but also secondly, the quantum of bond notes that will come into circulation. Bond notes are linked to exports, and so each time a tobacco grower sells their tobacco, that's registered as an export, and they'll receive an additional 5% as bond notes as a bonus. And so we'll also see an increase of bond notes because of the opening of the selling season. Rama.
Indeed. The country, of course, still does have restrictions on bank withdrawals as well. So walk us through how this works. How do farmers pay for bulk inputs, fertilizer especially, which is needed to plan to nurture the next crop for 2018 if they're limited to withdrawing around $50 a day?
Well, Rama, that's a big challenge that the central bank has realized, and so as a result, they've given a special dispensation, particularly to small-scale tobacco farmers. They are allowed during this season, to withdraw as much as $1,000 US from their first sale of tobacco, and then subsequent sales, because these farmers bring in their crop, gradually. Subsequent sales, they'll be able to withdraw $500 US, and so that should be able to address those challenges of preparing for the next crop.
Indeed. One last question for you, Farai. We've seen a small uptick in inflation between January and February. At least it's a positive number, up 0.06% year on year. And that comes after the decline of nearly 2/3% in January. What's driving inflation up, and is that trend likely to continue?
Well, Rama, in the last couple of months, we've seen, especially since the emergence of bond notes, we've seen a number of retailers, business people, saying that they're facing challenges in terms of accessing hard currency in order to import raw materials or goods that they sell. And so because they are no longer going through the formal channels, they're having to get their hard currency through informal channels, and that comes at a premium. And so these increases are factoring in that higher price that people are having to pay in order to bring in their goods. Secondly, since the promulgation of Statutory Instrument 64 last year, which restricts imports and requires people to have special permits to bring in certain goods, we've seen the re-emergence of middlemen or agents who have these special permits and are therefore bringing them in and selling them to people who don't have them. And so as a result, that agent's cut, if you want to call it that, is also pushing up these prices. However, going forward, I think it's unlikely to spiral out of control. It is likely, this inflation is likely to remain at these levels, largely because there isn't enough aggregate demand. Disposable incomes are low. We have this liquidity shortage, and so because of that, it will manage itself, and we're likely to see it spiral out of control.
Indeed. Farai Makutuya live in Harare, giving us the details of some pretty interesting regulatory arbitrage.